Okay, so let's talk about the additional requirements that would be involved if you decide to incorporate your business. So in this case, you're either a sole proprietorship or you're a partnership. And what you're going to do is you're going to start this corporation and we're going to transfer the operations from your sole proprietorship or partnership into this corporation. Now, a corporation is a separate legal entity. As soon as you incorporate, it's the birth certificate of a new entity that has the same obligations as us as individuals. We have to claim our income and we have to report it. So as a proprietor, you include your business income or statement of operations from business on your personal tax return. With a corporation, you also have to file a separate income tax filing related to that entity because it has income and expenses. So as a corporation, there's a separate filing. And not only is there a separate filing, it's a much more sophisticated filing. As an individual, we only have to report our revenue and our expenses. As a corporation, we have to report our revenue, expenses, but we also have to list our assets and liabilities. And with a corporation in Canada, it's highly advisable that when you file a corporate tax return, you have financial statements that are completed. This includes a balance sheet and an income statement that reports everything accurately. And I would highly recommend when you go to the corporation status that you have a CPA prepare notice to reader or compilation engagement financial statements at a minimum that will allow everything to be reconciled and make sure that you're reporting things accurately. So that would be a primary difference between a sole proprietorship or a partnership and a corporation. Now, when you think of employees, you can have employees as a proprietorship, pay them a salary, source deductions. That is the same circumstance as a corporation, just knowing that the corporation's name would be on it versus you as an individual. And what we have to think of is the different filing requirements maybe related to a dividend distribution for you, which is a T5 statement of dividend or statement of investment income that we provide to shareholders. That's a separate filing as well. But for the most part, everything else would be equivalent, whether you're sole proprietor, partnership, or a corporation. It's just the corporate tax filing and that distribution of investment income to a shareholder that would tie things in slightly different between a non-incorporated business and a incorporated business.